Pleasant afternoon to all. Thank you for taking the time off to join us in another session of Market Sense, a webinar series presented by the BDO Trust Group, hosted by one of BDO's seasoned investment analysts. She has over 13 years of experience as analyst for global and domestic macro research, providing economic briefings on macroeconomic developments in both local and foreign economies. She is also a fund manager who actively manages the offshore equity portfolios of institutional clients. Let's welcome our webinar host, Ms. Patty Sendiego.
Good afternoon. Over the past few weeks, we've seen the impact of the COVID-19 pandemic, wherein countries saw their respective economies contract to levels that have not been seen since the Second World War or the Great Depression. That's despite the fact that there was an unprecedented response from both central banks and governments alike globally. Central banks have cut interest rates to historic or near historic lows, while governments right now are spending aggressively, maybe even beyond their means. Now, you must wonder, what does this mean to your investment portfolio? Particularly, how will that impact the bonds in your portfolio? Ladies and gentlemen, welcome to another episode of Market Sense, a webinar series of BDO Unibank Inc. that combines the latest market developments and analysis with seasoned expert advice to help you take control of your investments and grow your wealth. In our previous discussions, we've shared with you a few investment ideas to help you navigate this constantly evolving investment landscape. One of them will be our topic for the discussion this afternoon. That is how you can continue to build your bond portfolio in this current environment. So our discussion will be divided as usual into three parts. The first part will be the conversation on the latest market developments, insights. The second part of which would be how we will translate that background into actionable ideas. And finally, today's conversation would not be complete without hearing from you, our dear clients. And as mentioned earlier, if you have any questions, do send us them our way through the chat box that was shown to you earlier. So for this episode, we've brought two of BDO's powerhouse investment experts. First, he's no stranger to this webinar series. We've had him for the first two episodes, and we're honored that he agreed to do the third one. He is the two-time Asia Asset Management Philippine CIO of the Year awardee and currently helps oversee, I think it's official, that it's over 1 trillion pesos of assets under management. Ladies and gentlemen, the Chief Investment Officer of BDO Unibank Inc., Mr. Fritz Ocampo. And our second powerhouse investment expert this afternoon, we are privileged to have him join us today. He currently heads the investment banking group of BDO Unibank Inc. and holds several positions within the bank as president of BDO Capital and Investment Corporation, as chairman of BDO Nomura Securities, and as chairman of Avron Holdings Corporation. He also sits on the Capital Markets Committee of the Bankers Association of the Philippines, as well as the Philippine Stock Exchange. And he also sits on the Listings Committee of the Philippine Dealing and Exchange Corporation. He has worked in other financial institutions in New York and Hong Kong, particularly the Bank of America and Barclays Bank. And he holds an MBA from the Wharton School of the University of Pennsylvania. Ladies and gentlemen, our second powerhouse investment expert for today, Mr. Ed Francisco. Hello, Fritz and Ed.
Hi, Patty. Good afternoon.
Hi, Patty. Hi, Fritz. Good afternoon.
Hi,
Good
Ed.
afternoon and welcome to Market Sense, gentlemen. Glad you can join us today.
Yes, thank you.
Before I-
I'm honored to be with both of you.
Thank you, Ed. Before I turn over to the discussion to you both, let me ask you first that this could probably be the first time that you are both joining as guest speakers, because usually I would know that either just one of you would be invited as an event panelist or speaker. Would that be correct?
Yes, Patty, this is the first time.
Yeah, that's good. We just try to divide up kasi nga naman we help our clients. So if one is busy, one will take over. And Fritz, when Fritz commands an audience naman, everybody is already satisfied. So he doesn't need any other support.
Okay, so this being a special occasion, since you both are here with us today, we'll try to change things up a bit. Because at this point, we think that it would be for our clients' benefit that we will have the Chief Investment Officer of BDO, as well as the President of BDO Capital and Investment Corporation, exchange notes, insights, ideas through what we call a fireside chat. So, gentlemen, I leave it to you for your conversation over the next few minutes, and I'll join you back again later.
Thank you, Patty.
And
And Ed, thank you very much for joining us this afternoon. We are truly very excited and honored to have the Ed Francisco with us in today's session.
Fritz. Anyway, shoot, please. What can we talk about?
Well, first of all is the financial market in the Philippines knows Ed Francisco as the one of the pillars of the Philippine capital market. But many are not aware that Ed is also a triathlete. So my first question is, how are you keeping in shape? And are you still able to swim, run, or bike during the pandemic?
Okay, thanks, Fritz. Now, I guess the advice that Fritz and I will give the audience is that you really have to, I guess, balance everything. So aside from your financial health, physical and emotional health is important. So because even if there was a lockdown, first of all, I guess Fritz and I, myself, we and the other senior officers of the bank have not missed work. We've been here every day because we want to take care of your investments. But despite that, because the hours also are shorter, I'm actually more fit now than I have been. During this since March, even if I haven't missed work, I've done two virtual marathons, 42K. I've
Really?
done
Huh?
7 virtual triathlons, so I'm very fit. And then I probably run 100 kilometers a week, and I bike 150 kilometers a week. So I'm okay, Fritz. Thank you.
Wow, wow, that's very good to know. You know, it's been 5 months now
Yeah.
since NCR went on ECQ on March 15. How are you able to adjust to the pandemic, and have there been any major changes or shifts in your daily routine?
Yeah, no real changes. The only difference really is that I've had the chance to be home for dinner regularly because of the curfews. No, because in the past, as you know, we have to market, we have to attend our meetings, our dinners with clients. So now a lot of it is the new normal is we all have Zoom on our phones, Zoom, Webex,
That's so true. That's so true.
else. So it's a new way of doing business. So we just have to adjust really.
So the family is the beneficiary because you're able to have dinner with them every evening.
Yes, yes. My wife, yes.
Well, I've mentioned, Ed, in our previous webinars that this is a crisis like no other. Have you ever seen anything like it? Have you experienced anything like it in your many years in offshore or onshore experience in the capital markets?
Yeah, no, good point, Fritz. From a capital markets perspective, I guess having because I'm much older than you naman, and I have to admit
Konti
that.
lang naman, konti lang.
But I was in high school, you were in grade school, and that's 7 years. Okay, no, but because you were, I think, a year younger than my brother, si Father Manuling, di ba? But
Yes, yes.
anyway, I've seen the ups and downs. The Asian financial crisis, I was already working during the FX squeeze and everything, and even in the 80s. It affected the capital markets, it affected the banking markets, but nothing we has ever experienced where everything shut down. So this is also new for all of us, especially the consumers. Never felt this kind of closure before, so it's new to us. So there's no playbook, and I guess we just have to think on our feet.
That's so true. You mentioned that it's the first time that the economy shut down.
Yeah.
And because of the spread of COVID-19 virus, the government has been pressed to reallocate its 2020 budget and to spend for public health and social welfare through the ayuda. How is the government funding these huge and unforeseen expenditure items?
Yes. No, I mean, they are able to borrow anyway because tax collections admittedly have gone down a bit because a lot of the businesses are closed. But at least they have funded it through domestic borrowings. Even the recent RTBs, where we, the BDO group, was played a key role, of course, since the start. They've also been borrowing from the foreign market. So at least there's a mix, no? ODA is still there, but mainly borrowings, and at least because of our in fact, we got upgraded, as you remember, Fritz, right? Japan Credit Rating Agency upgraded us, so
That's right.
that allows us the fiscal space to borrow and at least fund some of these projects of the government.
And is the government borrowing pesos or US dollars or other foreign currencies?
Yeah. So primarily consistent with what our treasurer, Lea De Leon, has espoused from the year anyway, it hasn't changed. Majority is still domestic, which is also good for us and our clients because before they were borrowing maybe 50-50 domestic and foreign. Now I think it's almost two-thirds domestic, two-thirds pa rin siguro ang I guess may domestic and external pa rin, but having said that, because of the liquidity, at least we wanted to tap the liquidity here. So there's a bigger domestic component.
That's good to know. The virus isn't going away, and the number of COVID cases continue to rise globally and locally. Congress has recently passed the Arise Bill, and the Bayanihan Act 2 has reached the bicameral conference committee, and I think the compromise is something like a 166 billion in additional stimulus package. Are you expecting increased government borrowing for the second half of 2020 and through 2021?
I think they will still borrow because admittedly the inflows are not as strong, right? Of course, there's been some resistance. Also, we're hearing from some of the Congress and from the Senate, because at least aside from the Bayanihan Act 2, there has been some resistance on Arise. I think create that other bill where they wanted to lower corporate taxes and reduce some of the incentives of the foreign companies has a bigger chance. Arise will be good anyway, but the question really is funding, right, Fritz? You mentioned the number before, but I also understand that the original target was 1.3 trillion. So I
Yes.
guess Secretary Dominguez was also a little cautious because he didn't just want to borrow immediately the amount, even if there's liquidity. But so I agree with you. There will be additional borrowing, but in a way also that's why I respect our monetary officials because they're not just going to borrow rampantly. They are also very concerned about our debt levels, diba? So that we retain our credit rating. So yes, they'll be borrowing, but at least we can ensure we're assured that the government is very careful also.
That's very good to know. You mentioned recently that the market is very liquid, and the government successfully raised over 500 billion in a 5-year retail treasury bond, or what we'll refer to as RTB, in the market. Ed, who actually funded this RTB? Was it institutional or was it retail money?
Yeah, the nice thing about this, starting from last year, they really wanted to make this instrument available all the way to the masses, right? That's why even for a minimum 5,000 pesos, you can invest. So the recent innovation is you could already invest online. So you just click online, there are online portals you can invest. So there were more retail involvement, but about of this still Fritz, were government-owned corporations and institutional. Because nga some of the companies were flush with cash pa rin. So they maybe in number of investors it was still retail, but in volume it was institutional. So that's good because that shows also that they were supporting the country. Because this Progreso or RTB was to fund COVID, to fund health, and to fund the government's other activities. It was a call to action to ask help from the private sector, and the private sector delivered.
And definitely it also reflects the ample liquidity in the market, because in previous years, when the Bureau of Treasury raises 250 billion, we were already impressed. And now they raised double that amount.
Correct, correct. So in the past, yeah, because the nice thing about it, Fritz, kasi I think when I joined BDO 21 years ago, the first that was RTB1. So we were there from the start, at least our group. We've seen it evolve until it became a regular staple of the country. And yeah, before 200, 300 billion was big already. And this one really shows that at least may pagmamalasakit yung Filipino, because the yield was still good. It was 2.625, I remember. But for that tenor, it was testing it. But then at least everybody was happy. And the limitation this year, because in the past, all of us would be helping with have roadshows all over the country. Now it was just virtual roadshow. So it was hard to do that physical push na kukulitin mo or you encourage the clients to invest. So dito, by just virtually reaching out, and then they came in through the branches and through the trust and everywhere else to fill up the forms and to invest. So that's a very good sign.
Definitely, definitely. With the release of the 2Q GDP numbers in the Philippines, the Philippines is now in recession, our first in over 2 decades. And what we fear in our forecast would be the steepest decline in the economy in 35 years. Ed, 35 years ago, I was still in high school with Father Manuling.
Okay.
So I wouldn't even have any recollection, no, because I was busy playing basketball. But in your conversations now with the leaders in Philippine business, whenever you go through a crisis, an economic recession, companies change their behavior. Just like you and I have adjusted our behavior and our routine in order to protect ourselves from the virus. In your conversations with the leaders of Philippine business, what have they shared with you in terms of how they are coping with the crisis as a company?
Yeah. No, in general, I guess the great companies, of course, immediately revisited their projections and their business models. First of all, the business models, because if your business model is wrong, no matter how lever or unlevered you are, meaning your debt, you won't survive. So they've adjusted. A lot of them have developed, as we know, the online capabilities to be able to sell. They've revisited their supply chains. But from the financial side, a lot, at least of the companies that we cover, Fritz, have really reduced their capex. Mainly make sure that only the things that are required have to be done. A lot of it be postponed. For example, even our real estate companies, a lot have slashed new developments. They just wanted to finish their buildings first. They noticed changes. A lot of maybe example also, instead of building vertical, there has been a shift to horizontal because people are afraid. Some people were afraid of condos, but it's come back anyway. So they focus on other things. So that shows the agility of our customers. I think the Filipino businessmen anyway, because we've experienced some of these crises. Because even you, I'm sure, even if you're playing basketball in grade school, you're already studying kasi talino ka. So, we learn. It's not naman parang,
Right.
parang di tayo lang yung basta bahala na. They're very careful. And then a lot of our special conglos have been also ensuring that they have cash. Kasi nga, in a way, cash is king. So if there are other companies that are in distress that need help, the bigger companies are ready to come in to have a strategic alliance, to buy in. And that's also good because matatapang naman yung mga Taipan natin business leaders and they know in a way that yes, this is unprecedented, but on the other hand, babalik rin yan kasi parang the resilience of the Filipino is there and whether it takes a year, whether it takes 2 years, things will go back and the demographic profile and the consumer profile as you have espoused yourself is still there pa naman, Fritz, di ba?
Yes, and as you mentioned, the memories or the learnings of the Asian financial crisis and the global financial crisis are still ingrained in our memory, and many of the leaders of business back then are still in the market today, including yourself. One of the positive action taken during the second quarter was the strong action from the central bank, from the Bangko Sentral ng Pilipinas, of cutting the policy rate by 1.75% and the reserve requirements of our banks by 2%, unleashing 200 billion into the system. My question is, will this lower interest rate scenario, which we think will be lower for longer, does this encourage companies to borrow, and are companies tapping the capital market?
Okay. No, very good point, Fritz. I guess first of all, my reaction to Governor Ben's, I guess, bringing market rates down and following what he's anyway announced. No, at least he's been very transparent. He's followed through with that, and I applaud that. I laud what they did. I think from that perspective, the rate side they've done as much as they can already. And that's encouraged some of the clients to borrow if needed, of course. But of course, they were tightening their belts first, which is a good strategy. So many companies have been borrowing. Many companies have tapping the capital market. So even during COVID, we were working with the SEC on preparing some of these bond offerings from Ali, RLC, SM. We were able to do deals even if it was all virtual. We continue to see more companies. Except Chris, there's a dichotomy lang. Today there is this dollar market that companies are tapping, and there's still the peso market.
One of the surprise developments in this crisis is the peso strength, and year to date the peso is now up by 4%, and this week it started to trade at 48.60, 48.50 level. Do you think that companies would continue to borrow in US dollar? We've seen several starting to borrow in US dollar debt for about 10 or 20 years. Do you think that this will be a trend, that this will continue moving forward?
Okay, Fritz. Yeah, I guess the behavior, maybe if we step back, what we saw kasi is, you might say, are the participants in this webinar might say, wait, if the Philippines is flush with pesos, you're saying, they might say, then why are the PLDTs, Jollibees, etc. borrowing in dollars? It's really more a question kasi of what the investor sentiment is in the Philippines. The Philippine investors today, at least the majority, prefer shorter tenors, meaning 2 to 5 years. Even 5 years was medyo a stretch na, that was the RTB. But in terms of corporate borrowings, corporate bonds, we were focusing on 2 years, 3 years lang, even with Aboitiz. And no matter if they're AAA, the investor sentiments were short, maybe because there was still that uncertainty. On the other hand, when you tap kasi the foreign markets, the bulk of the funding is coming from institutional. So these are the insurance companies, the educational funds. mas I guess mahaba talaga ang tingin nila, and that's why there's a longer tenor. So what our corporates have done is, that's why I mentioned nga there's this dichotomy or two-pronged strategy for day-to-day peso requirements, and because naman they don't, if there's no natural hedge, it's good to borrow in peso. So that's why the bond markets are there. But then also, and it's good that you mentioned the peso being so strong, because the Philippine corporates can borrow at significantly the lowest rates that they've ever borrowed at, even the 4 or 5%, which you've never heard of before. So because the peso is strong, even if even if it depreciates a little, some of these corporates lamang pa rin. So they're taking advantage of the longer tenor they can get, the 10 years, the 20 years, and they're also taking advantage of the low coupon. So in a way, even if the peso depreciates later on, as tayo when we discussed among our seniors, it could depreciate later on this year. It's not going to be that big a hit. And then especially for some of these corporates who have dollar revenues, PLDT, Jollibee, because they have foreign subsidiaries abroad, they can hedge it. It makes sense also. So that's why I guess despite the liquidity here, I still suspect Philippine companies will be borrowing abroad, and that's why we as BDO Group, we've supported Vistalan, we supported Mega World, we're also helping, of course, Jollibee to a certain degree, and PLDT and the rest of the other corporates who will borrow. Tayo naman kasi working with you and our private bank, some of you who want to buy, or even San Miguel, we've helped San Miguel, who want to buy this, kasi sometimes mas malaki ang minimum amount because you buy it through trust or private bank. Sometimes the minimum is $200,000, for example. But if you do want to do that, BDO, we find ways to make it available to you.
You explained it so clearly, Ed. So interest rates have fallen to historical lows. So from the borrower's perspective, this is the right time to borrow long term, to lock in those low interest rates. On the other hand, we investors, seeing that interest rates are already low, we just want the sweet spot of about 2 to 5 years. And therefore, the Philippine corporates have to borrow offshore in US dollars to lock in those low interest rates.
Yes.
My final question to you, Kuya Ed. As a pillar of the Philippine capital market and a big time investment banker, you bring together borrowers and investors through the capital markets, through these peso corporate bonds and RTBs. My final question for you. Given the current environment, what is your advice to them?
Okay. Sometimes really you have to give advice to different two sides, di ba? And then I guess as we go back to our basic Eco 101 or Eco 11 of supply and demand, from the supply side, meaning the investor side, di ba? The Filipinos today are looking at shorter tenors. And they want as high a rate as possible. But from the other side, the borrower side naman, or the issuer side, they want the lowest rate possible, and they want the longest term. They want the longest tenor naman. So that's law of supply and demand, basic supply and demand curves. So what we're trying to do is trying to develop the capital market. We're trying to lengthen the curve. We're going to shift the demand all the way 5 years as people get more comfortable, as the economy restarts, Fritz. Hopefully they'll invest in 5 years, 7 years again. And because anyway, as a borrower, if from the borrower's perspective, our advice always is to tap the markets today, because we think rates are extremely low and they will not probably go any lower. They might even go high. There might be a bump in the next 6 months, 9 months, whatever, as the economy improves. So it's time to borrow. The question is, from the investor side, are you willing to lock in long now, or do you want to still keep short in the hope that things will go up? We feel that probably rates are stable already, so that if there's a good enough company that you believe in, that intrinsically you follow them, and they're offering a decent rate, especially if it's offered by endorsed by Fritz and his team, I think you should invest in them, because that way you have a good investment, good returns, right? Of course, depending on the tax situation, generally it's 20% tax, but these are great yields. And you diversify your portfolio out of just bank deposits so that you can sleep. Sa BDO group naman, we don't encourage naman yung mga really speculative investments. We want you guys to sleep. We want you guys to be able to do your daily chores, but at least have some regular money to arrive. So that's the philosophy we have.
Well said, Ed. Thank you very much for your insights. They are much appreciated. And I hope you stick with us for the Q&A towards the end of the program.
Thank you, Fred.
Ed, thank you for that optimistic message. One that you share with us in our previous conversations when we said that recovery comes after a crisis. So we must have the courage to act on opportunities that there are right now. And you just presented to our clients, both borrowers and investors, basically what the current environment holds for them.
Thank you.
See you later. We'll see you later again in the Q&A, Ed.
Thank you.
So, Patty, where were you in the 70s?
I was not yet even born in this world yet, Fritz. And you were in high school, you said earlier?
In the 80s, not in the 70s.
Okay, so you got your chance now to finally be the one interviewing one of our investment
I've
experts.
always wanted to do that, Patty.
I know, but we can't let this conversation go by without asking you questions, asking you for your advice on how our clients for today can continue to build their bond portfolios. After all that you've discussed and shared with Ed just a while ago. So at this point, I'll now be again the interviewer and you're the interviewee. And my first question for you today it goes straight to the point. Why is it important to have bonds in one's portfolio?
Thank you, Patty, for that question. So our clients this afternoon are a mix of our retail clients, retirees, and maybe some of the representatives of our institutional clients where we manage retirement funds for them. So simply put, to answer your question, you invest in bonds so that you could have regular source of income, cash flow streams into your portfolio. If you're a retiree and you don't have anymore your monthly income from your salary, then the coupon payments from the bonds allow you to meet your regular needs, payment of utility bills, payment of your rental income, or payment of your essentials. For the retirement funds, the regular income streams allows you to meet regular retirement benefits. So having regular source of income that you can reinvest again later on as the market changes, whether interest rates go up or move sideways, will help keep your portfolio healthy.
Now, Fritz, is there such a thing as having too much bonds or too many bonds in one's portfolio?
That question would be answered by looking at the risk appetite of the investor. So, for instance, conservative investors would tend to go everything, put all their funds in fixed income instruments. So when you look at just fixed income instruments, you're looking at time deposits, you're looking at government securities and corporate bonds. However, the risk taker, the more aggressive investor, would put more of the funds in equity markets, both global and local equity markets. And once you do that, then your fixed income investments would tend to go down. So that question, is there such a thing as having too much bonds? The answer there would reflect your risk appetite as an investor.
So basically, bonds are important to one's portfolio because it gives you some stability through that stable source of income.
Yes,
But at the
and
same time, it,
once you invest in government securities, that's practically zero risk, no? Because the government guarantees payment of the interest income or the interest expense on the part of the borrower, and that brings down the uh, portfolio risk of the investor.
now my next question is something that I've asked you in our previous conversations. But I just want to make sure that you are consistent when it comes to your answers. Okay, I think I just put my KRA for this year on the line with that statement. But on a serious note, kidding aside, for our clients who were not able to join us in the previous episodes, does it still make sense, or are bonds still an attractive investment outlet, given that, as you just had with your discussion with Ed earlier, interest rates can remain low for a longer period of time?
The answer to that question is yes. Are bonds still attractive? The answer is yes. Does it still make sense amidst the decline of central bank policy rates? The answer is yes. You just have to manage the exposure. In our conversation with Ed earlier, as an investor, you don't want to go too long, simply because rates have moved down. But looking at 1 year all the way to 5 years still makes sense, simply because as an investor, the starting point is what is your time deposit rate right now, and it's half of 1%. So you look now in the market, what instruments would allow me to get a yield pickup compared to the 0.5% time deposit rate right now. And for conservative investors, the answer is bonds. For moderate investors, the answer is bonds. Even for aggressive portfolios, the answer would still be bonds. But as I mentioned earlier, in varying degrees, in varying exposures. But this is the stable way to invest your funds and get regular cash flows into your portfolio.
In your conversation with Ed earlier, you touched on the recent successful over 500 billion RTB issuance that's for 5 years, issued by the Bureau of Treasury, by the Philippine government, at rates of around 2.625%, if I remember it correctly. Now at 2.625%, this is for 5 years. Does it still make sense to get into government securities of that tenor, or maybe even shorter if you're saying do not go into longer dated tenors for bonds?
Yes, if you accept the proposition that we are headed for lower interest rates for longer, and both the Fed and the BSP have announced that they would keep interest rates low all the way to 2022, then your levels of sub 1% time deposit rates would be here for at least 2 years. And so lending the government for 5 years or shorter at 2.6% or lower, but higher than your 0.5% time deposit makes sense because the government securities are risk-free, that they are being guaranteed by the national government, that it's part of the annual national budget that's passed in Congress. And so if you are fearful for the future, if you're anxious, if you're scared as an investor, then putting an allocation for government securities still makes sense, Patty.
Okay. Now, if our clients want a yield enhancement, but would still like to stick to fixed income securities. What else can you recommend for them?
Okay, so again, we go back to your time deposit rate at 0.5%. You look at your government securities. For 1 year T-bill, it's at 1.8. You look at your 5-year issuance, it was at 2.625, currently doing closer to 2.4. And when you look at your 10-year fixed rate treasury note, it's now at an all-time low of 2.5%, Patty. Not too long ago, 2.5 was your time deposit rate.
Correct.
So if you're looking for a yield pickup, then one idea could be to look at corporate bonds. When you look at the historical movement of time deposit against against corporate bonds, you would definitely see a 2 to 4% yield pickup over the last decade or so. So given today's 10 years at 2.5, and a corporate bond for 5 years at closer to 4%, isn't that an attractive proposition? So what are the risks when you invest in a corporate bond? The first risk, of course, is the credit risk, the risk that you will not be paid by the issuer or by the borrower. And so to mitigate that risk, you have to select the companies that you will lend to. And the second risk is price risk, market risk. And so you have to be careful that you don't go too long, as we discussed with Ed earlier, that you are in the sweet spot, no, where there is an issuer and you are the demander, you are the funder. Both of you will agree that you're okay to be at that level between 2 to 5 years.
Between you and Ed, you have a tough balancing act in terms of meeting expectations of both borrowers and our investors. As the CIO of the largest fund manager here in the country, you have to select from time to time the deals or the offerings that emanate from investment houses like that from Ed's group. And when it comes to fixed income securities or bond offerings, how do you choose borrowers, or how do you choose who to lend to?
That's an excellent question, Patty. So we are the investors. We fund, we lend, and therefore we look at the credit rating of the borrower. And very important in that credit assessment would be the cash flows. Are the cash flows of the company strong? Number one. Number two, what are the debt levels, the current debt levels of the company? You don't want to lend to someone who is swamped with a pile of debt that is not justified by their revenue stream. And third, you want to lend to market leaders, especially during this recession. This is a scenario of a survival mode, Patty. You ask the question, who is likely to survive if the recession is prolonged? And definitely you would go for market leaders rather than upstart companies. So these are the important factors that we consider when I sign the memo and say go and fund it.
Before you give your approval.
Before I give the approval.
Inform our clients what are the latest offerings
Yes.
in the market.
Because once we sign on, definitely our clients will follow both retail and institutional money. But once we say no, we give the thumbs down, we have to justify as well why we are not comfortable to expose ourselves to this borrower.
I think I'm being told that I have to ask my last question for you so we can let our clients have the chance to join in this conversation. My last question, I think you've already touched on in terms of what you'll recommend in terms of how long or what are the maturities for the bonds that our clients should participate or buy in right now? Should
Yes.
it be short or longer dated tenors?
Having seen the interest rates go down now to historical lows, we would definitely prefer the short dated instruments. We need to continue to remain invested. There's no use keeping your money in your drawer. But if we lend, if we invest, we'd prefer the 2 to 5 year window.
That's 2 to 5 years for the peso,
Yes,
correct?
2 to 5 years for the peso.
What about for the dollar offerings that you discussed earlier with Ed?
So for US
Is there a
dollar
sweet spot
paper,
also? Yes.
for US dollar paper, the recent issuances are 10 years. So you'd see a strong supply from the 10 years. But if you could find 7 years, that would be a better window, meaning the 10-year papers that have already run down. So for US dollar paper, you'd be focusing at the 7 to 10 year window.
So 2 to 5 years for peso bonds and go for the 7 to 10 years for dollar corporate or dollar bond offerings.
Yes, Patty.
Fritz, that's my last question for you this afternoon. At this point, we'd like to ask Ed to join back for the Q&A.
Go ahead, Patty.
So, ladies and Ed, are you there? So, ladies and gentlemen, yeah, at this point, it's now your time to send in your questions for our to our powerhouse investment experts. So, from the man responsible of finding ways of bringing together you guys as investors and our corporate clients as borrowers, you can also ask questions to the man who finds ways to help us navigate during these interesting investment times. My first question would be for Ed. I guess this is expected. What are the upcoming offerings, or what are your upcoming offerings right now, if you can share it with our
Okay.
clients today?
We're working on a couple anyway. Just so that you know, generally there is a 1 month window. That's how it works. When I have a potential deal from a client, you generally it takes 3 months to do it. That's from womb to tomb. That's when you start preparing the prospectus, talking to the investment groups like Fritz and the other large investors, and then by the time we file with the SEC, there's usually 1 month approval and then 1 week na lang yung road shows and everything. So that what happens kasi until we file with the SEC, we cannot announce it. The SEC will get angry with us if we disclose until it's filed because it's not supposed to be public. So usually Fritz will know in advance because we're allowed to talk to institutional investors. But the retail party are not allowed until it's filed. So sometimes there's an information delay for the retail investors. But yun naman ang galing ng BDO Trust because they know what the clients want, or they can already make taya and say, I know that my investors will like this. So when I talk to the Ayalas, the Robinsons, Fritz will tell me, pasok kayo dito, I think this will be good. Ganon. So parang naaamoy na namin what is going to be doable, what is going to sell well. Kasi from the client's perspective, I guess we have two clients. From the investor's perspective,
Side.
they want syempre as much as they can. From the and as high a rate as possible. From the Ayala's perspective, the SM's perspective, they want as
They
low
want to borrow as low.
so that our goal is to bridge that gap and find that balance nga, no?
Right.
But having said that, the banks will continue to, I guess, issue bonds. So, and generally these are just the large banks anyway. And then the corporates, generally naman, these are the same names. These are the conglos and probably some of toll road companies. There are two of them anyway that have done it. And then there's one energy company that has come out anyway unlisted. Everybody else is listed. So these are companies, household names that you know. So it's a question probably of when it's announced the pricing, Patty. But I agree with Fritz naman. We're really focusing on the 2 to 5, but maybe later part of the year, we'll try to see if we can test the market for a 7 or a 10 to see lang. But generally, the way we work is we try to come out with two tranches when we come out with the name para we will see na lang ano yung dudumugin ng investors, di ba?
Which has more
investor
demand,
wants
correct?
sana dudumugin yung longer term tenor, but when let's say when because BDO trust in a way is hindi naman pagyayabang, but they are the elephant in the room. So they can dictate rate or they can move markets, di ba? So, but because they know naman what they're doing and they protect the investors' money naman. So, if their sentiment really is 2 to 5, they will get their 2 to 5 for our clients. And then sometimes there might be the konti, the one who want to invest longer, will try to satisfy that for it. But don't worry, there will be more. There will probably at least another 5 to 10 issues before the year ends of corporates that are AAA.
And thanks for sharing as much as you can. I think that's already more than enough, given the restrictions, limitations that you have to abide by, given these offerings that you do. Thank you. Now, Fritz, I have to give you this next question because you mentioned this earlier, that RTBs are risk or retail treasury bonds are risk-free. Are there any scenarios that might put investors at risk of not getting paid by the government, in this case, the Philippine government?
It's practically zero. When you talk about peso borrowings of the Philippine government, our national budget is in peso. It's denominated in peso. Your currency is the home currency, the local currency of the Philippines. So even during the dark days of the late 70s and all throughout the late 80s, when I was still in shorts, that question would always be asked to us by our clients in the 90s. Is there a chance that the government can default? And worst case is you print more pesos to pay your obligations. But as we showed in the national budget earlier, only 11% of the budget now is going to interest expense. That's how much the Philippines has improved. In the 70s, 80s, and early 90s, that was as much as 40% of the national budget. That's number one, Patty. Number two, when you look at debt to GDP, our ratio is only at the mid-40s compared to Japan at 210% of GDP and the US at 180%. So I can say with confidence that there is zero chance that the Philippine government will default on a peso obligation.
Ladies and gentlemen, you heard it straight from the Chief Investment Officer that he confidently said it. Zero risk of not getting paid by the government. Okay, for gentlemen, just a note, even if I address the question to one of you, feel free to add or answer to the question after the other one has finished given his reply. Now, for the next question, let's give it to Fritz again. Given the market environment and we've touched on the fact that there's still a lot of uncertainty in the horizon. Between money market funds, where you can park your funds while waiting for higher investment products, and locking in medium-term bonds. Do you recommend locking in medium-term bonds? Or what do you recommend right now? Money market funds or medium-term funds, bond funds?
That's a very good question, Patty. But again, that's a trick question. That's the question I give in my final exams at the AIM, because there is no quote unquote correct answer for everyone. It depends on the investor. It depends on your investment objectives. But let's take it from the point of view of our institutional clients. For our retirement funds, definitely I would prefer a medium-term bond rather than park my money in money market instruments. However, I recognize that there are individuals in this audience, and some of them are retirees, and they're just scared that this is now their golden egg, and they don't want to waste it. And so looking at our money market funds or our short-term funds that has a little exposure in government securities and corporate bonds makes sense. Our short-term fund year to date is doing, I think, at something at 1.8% compared to your time deposit at sub 0.5%. So it makes sense as a parking mechanism. But again, as we educate the public, Patty, we always tell them to diversify their portfolio. It's not an all or nothing thing. It's not, do I put everything in money market or do I put everything in medium term? You can go the middle road. You can put a little allocation. No? Just like when we fund the corporate bonds, we don't put all our money in Ayala Land, or we don't put all our money in Aboit is Power. We spread, we diversify the portfolio so that we can have a stable portfolio that gives regular income streams, and as Ed mentioned earlier, allows us all to sleep soundly at night. No, otherwise we can all get ulcers in this business.
Agree.
Thank you for that answer, Fritz. Ed, I'll give you the next question. Would it make sense, or will it help investors decide to know the purpose for which the bond issuer will use the proceeds for their issuances?
Yeah. Anyway, whenever we have a corporate bond, the purpose is always mentioned. If you had the choice, of course, no. Sometimes it's primarily for refinancing, meaning some borrowers right now or issuers take advantage of the low rates. They prepay a higher bond, or they were able to buy it back, and then they will refinance it with a lower rate. Sometimes they will also do it because they just wanted to lengthen the tenor, even if the yield is roughly the same. Of course, from an investor perspective, that in a way is the lowest risk kasi it's not incremental debt. But on the other hand, because our borrowers anyway are rated, and the bonds that we will endorse or recommend to you are generally from companies that we really study anyway. Diba? So even if the purpose is new money for an investment, you can also be assured, while you should also study it, pero we ourselves, before we bring it to Fritz, if they want to invest, BDO Cap, my analysts will study the projections and see that this is for a new investment, this is for a new factory or whatever, but we will study it, and we will study and see the sustainability and reliability of the cash flows. And then there's the second check. Fritz and an investment team will do the same because they're investors, their fiduciary responsibility. And then the investors will do that. So generally naman, it might be a little riskier if it's a new venture, but on the other hand, we validate it ourselves, and then we also ask the rating agencies to review it, the projections, and rate it. So there are parang 3 different eyes looking at it. So that also helps parang reassure the clients by the time
Our clients.
them, na our clients na parang, uy, hinimay na to. it's not, of course, it's never guaranteed, but we've looked at it also kasi generally also we also naman invest in these instruments, we're allowed to. So they can also be sure na parang, uy, there's skin in the game.
Ed, I'll give you this next question since you already touched on highly rated companies when it comes to the offerings that you give to our clients.
Mhm.
So are AAA companies likely to avail of their call option dates, especially if the coupon rates are high?
Okay, the quick answer is yes. First of all, the fact that they're AAA companies, ano yan, matatala sa calculation sa pencils. So when we have
Every centavo would count, I guess.
their CFOs and treasurers are the best, and that's their KPI. They want to lower their cost of borrowing. So tayo rin as investor, that's why sometimes when we do a 5-year callable 3, in a low interest rate environment where they expect rates to continue to at least to, di ba, rates to go down. Wait, go down ba, go up? The treasurer anyway will already the treasurer will refinance, di ba? So generally Fritz, when is the only time is it an interest rising environment lang where he will not want to call it?
Yes,
Kasi the refinancing rate is higher.
it's higher.
Yes, but today rates are so low.
You can refinance at a lower rate.
To borrow lower, he will avail of it. So it's not automatic. But remember, our CFOs magagaling yan. So that's why generally, di ba, ang dami nating initial ng mga corporate bonds, and then the issuers are calling them back because, or they're exchanging them because the rates are low.
Okay, thanks, Ed. Fritz, the next question will have to seek your advice on which is better to invest in when it comes to bonds. Should you go direct or through bond funds?
If you have the size, and our minimums are in increments of 1 million, I would prefer that you go direct to the bond. This would be held in custody for you. Every coupon payment and principal on maturity is credited direct to your account. And so for most of our parents, that's what they like. They like to hold the proof and they want to see it in their passbook that it's being credited to them. But if you're a small investor, we've created bond funds so that you can invest in increments of 10,000 pesos. Clearly, all our retirement funds go direct. All our
Right.
insurance clients go direct. So the answer to that question, Patty, is the size of your investable fund.
Okay, I think we have to take the last question for this afternoon.
Time is up
So-
already, Patty. That was fast. You know, having
I know.
Ed with us,
And
we have so much to learn from
Mr. Ed
the
Francisco.
guru.
Yeah.
No?
No.
So this last question I'll give to both of you. One, Fritz probably representing the investor side and Ed representing, the borrower side. This one puts reference to German bonds, 30-year German bonds in particular, that are at negative yields right now, but there was still a good appetite in the market. Do you see that in the Philippines happening? I guess going to negative interest rates? And will there be demand for such?
Fritz, mauna ka na.
I was about to point to you, Ed, with your vast experience
I
in
guess
the
that was a
market.
good last question for today.
As an economist, I would say right now that that would still be very far off in the Philippine landscape. Number one, because our inflation rate should hover at around 2.5% this year. Our official forecast was at 2.3, but because of some pressure on the transport sector, the last 2 months we've seen it rise to 2.7%. So for as long as you have a positive inflation rate, and your policy rate of the BSP is at 2.25, even if they cut by another 25 to 50 basis points, it would still be above 1.5. And therefore, that justifies a positive interest rate. Having said that, it's very possible that down the road, we could see negative real interest rates. And we've seen that for 3 to 5 years in the past. But in terms of nominal rate, I think for the Philippine economy, it's not in our near-term scenario.
Yeah, no, I agree, Pati, kasi effectively, of course, Fritz mentioned nominal and real. If the inflation rate is I guess if for it to be negative, negative no, nominal, that means the inflation really has to be close to zero already, which hasn't happened, in near term for the Philippines. But having said that, I just thinking lang from an investor perspective, mag-i-invest kayo, pero invest na kayo babayaran, kayo pa nagbabayad kasi negative, di ba? So parang I don't think it's in the Filipino psyche na, wait,
Will want to.
babawasan mo pa ako kakaltasan mo pa ako every quarter. So it probably what happened also, they will just put it in their banigs or in their, di ba, yung mga lolo natin, lalagay sa kutsyon, kaysa ka lang na negative pa.
Right.
Okay, as much as there is still a lot of questions coming in this afternoon, unfortunately, we have to cut our Q&A. So for those of our clients who sent in questions and we were not able to take them up, or you still have additional questions, kindly send us an email at bdoinvest@bdo.com.ph. Again, that's bdoinvest@bdo.com.ph with the subject heading Market Sense. Or kindly reach out to your respective relationship managers or branch account officers. Send them your questions and we'll get back to you as soon as we can. So again, today was very special. I wish this conversation can go on a little bit longer, but we thank our powerhouse investment experts, Ed and Fritz, for taking their time to share their ideas, insights, and advice to our clients that will help them take control of their investments and grow their wealth. Fritz and Ed, any final words from you guys?
From my side, I just want to thank Ed for gracing our session this afternoon. I'm sure all our clients are just thrilled to have the experience and the insights of Ed shared with them this afternoon. For our clients, thank you as well. This is the third of our webinar series, and I hope it's helping you gain some deeper understanding of the Philippine capital markets and how to invest your money moving forward. Whether you're a young millennial or a retiree or one of the leaders of Philippine business, there's still so much to learn. And please give us your feedback, how we can continue to improve. We work very hard with Patty to come up with the latest in the market so that you can make good sense out of it.
Yes, and from my side, I guess thank you all, Fritz, Patty, for giving me the chance to join you guys. In BDO, we work really as one. So it's not because I'm the investment bank and Fritz is the investment side. At the end of the day, the most important thing is you, the customer. So we're always here to help in any way we can. So we just hope that at least you see naman the nuances of how we work together or how a deal is evolves. So feel free, if you have any questions that I can also answer once it goes through the side of Fritz's team, we'll answer it, of course, and we'll help you with all in any way we can. Thank you and have a good long weekend, everybody.
My takeaway from our conversation today is this. As investors, bonds give you a stable source of income that you can help steadily grow your wealth, but at the same time, it helps build a resilient portfolio, especially during times of uncertainties, like in a crisis. But beyond one's portfolio, bonds give Philippine institutions or Filipino companies means, whether during good or challenging times, means to act on opportunities, to invest, to diversify, or even expand. And bonds actually give or become instruments to fund long-term projects of the Philippine government or of Filipino companies that eventually become essential for nation building. That concludes our conversation for this afternoon. In behalf of BDO Unibank Inc. and its subsidiaries, we greatly appreciate you taking time to join us today, and we hope to host you again in better times. For now, we wish you and your loved ones to be healthy and safe. I am Patty Sandero, and we'll see you in the next edition of Market Sense.